Let's welcome on board Siddharth Khemka as well, Head of Retail Research at Motilal Oswal, joining in the show right now. Siddharth, hi, afternoon. What's the expectation from Infi and Reliance?
Yeah, hi, good afternoon. Yes, I think we saw some of the large names coming out with results, but this is really the test of the waters for Q3 numbers. The biggest market cap company, Reliance, will be coming out with results. We are expecting a slight improvement on a sequential basis. That's a good sign for Reliance. They have been witnessing some pressure in Q2. But Q3, we are expecting EBITDA to grow about 4% on a Y-on-Y basis. Production is likely to remain flat at 17.5 MMT. And if you look at the standalone EBITDA, that kind of which is the core business of the oil to chemicals business, that will remain a bit under pressure. We need to look at more clarity from the company in terms of the new energy business, which is kind of becoming capex heavy and becoming a drag on the balance sheet, and that is kind of a main concern from the investors on Reliance right now. But as I said, net on an overall basis, net profit, we are expecting a marginal increase of 3% on a Y-on-Y basis, and margins, which is a key factor, which will see a slight improvement on a sequential basis.
Point taken. So that's the overall market setup right now. But, Siddharth, what's the take on some of these jewelry companies? Because Titan came out with the update. That looked okay. Kalyan Jewelers, the update looked okay, but the stock has been on a downtrend.
Yeah, if you look at jewelry, I think numbers were the pre-quarterly business updates were pretty strong from the likes of Titan, Kalyan, we had Senco, we have some other as well. Kalyan has been embroiled in some of the rumors in the market of late, which the management has come out both on the media as well as on the con call, refuting any intention to buy a new aircraft or allegations of an IT raid. So in this kind of volatile news flows, it becomes difficult to give a view on the stock price. If you look at core business per se, I think the numbers stands out pretty strong. They have been reporting strong same-store sales growth, double-digit same-store sales growth, overall growth of almost 30% compared to 18-20% for Titan. The stock has definitely run up in the past, and valuations could be something we can debate on. But again, I would say that the stock could remain under pressure till the clarity emerges on these news flows that are doing the rounds about for Kalyan.
Yeah, okay, of course, the news flow and some of these speculations is something that is keeping that stock under pressure. That's something to watch out for. But come next week, which is the start of next week, Siddharth, we'll also have that Bharat Expo, which will be underway, and the street is expecting a lot in terms of what could be the new launches, some new fuel technologies, etc., that people are watching out for. What do you make of the auto sector right now?
Yeah, Nisha, I think still under the woods, pressure on overall volumes continues. Thankfully, the month of Jan, we saw most of the auto OEMs took the price hike, so that mitigates the margin pressure to some extent. The entire industry is looking forward to the Auto Expo for some of the companies. For example, M&M has already launched its EVs, which has been well received by the market. Maruti is expected to launch about 6 new SUVs, including one of the EVs that they have still not been entered into. I think a lot of hopes are there. Our preferred pick would be M&M, which continues to do well in the SUV segment. Tractors are witnessing significant growth. We believe the management thought process in terms of growth, product launches, that continues to do well. Maruti is something interesting at this point in time. They have few gaps in the SUV segment, and with these launches, we believe those gaps could be filled. Plus, the key driver for Maruti could be exports, and they are focusing a lot on using this driver to kind of drive the volume growth. And this is one stock in the space which is trading at a discount to its 10-year average in the large cap OEM space. So definitely margin of safety wise, I think there is plenty. So Maruti can be one stock which could be a kind of a surprise pack from the Auto Expo if we look at.
Okay, let me quickly take it across to Nagraj as well before we let him go and get in some BTST trades. Nagraj, what's on your list?
Yeah, I have two stocks from the mid-cap segment. One is from metal segment. That was MOIL. MOIL, if you chartically look at MOIL has been a range bound action and has been continuously resisting at the 200-day EMA and over the last 3-4 sessions, continuously making an attempt to break out. I'm expecting a breakout in the stock. Currently trading around 357, 357.50. One can look to buy at this point of time, and target would be around 380, 382. One can place a stop loss at 360. And second one is, one can place a stop loss at 348. And second one is that GNFC. This stock has been showing in a downtrend over the last many months. The lower top, lower bottom is indicating that the stock was in a downtrend. Recently, the overall chart pattern is looking promising. That indicates that the current resistance of around 551, 552 is going to be taken out. And this fertilizer stock is likely to break out of this hurdle in the near term. Currently trading around 551, one can look to buy at this point of time, and one can place a stop loss around 535, and 585 is going to be the target.
Have you on the show. Naresh, what about your BTST ideas?
So first is the buy on Aarti Industries. The stock has corrected a lot over the last 1 year, making a base out here. Looks like a reversal in place. Stop loss at 434, target price of 450. Second is a buy on sale, oversold and now recovering. So expecting some more moves here. Stop loss at 106, target price of 112.
Top recommendations coming in as a BTST trade. Quickly taking stock of what else is happening in the market. Well, on the gaining side, it continues to be similar names. Some of the railway companies are doing well, and textile too, actually. Siddharth, these are two pockets wherein we are hearing that in this budget there's going to be specific focus. Today there was a report in the paper talking about 20% increase in railway allocation. Textile is something that we have heard of late, especially to capture the opportunity which is there from Bangladesh Plus One. Would you want to bet on the stocks just yet, or wait buy for those announcements to come through and then buy these?
So Anisha, yes, I think if you look at defense, railways, the pet sectors for the government-centric companies, they generally do well before the budget in anticipation of increasing allocation, higher spends. So we also expect government to increase the capex. So FY25, we have seen lesser government spending, which should catch up in FY26. So increasing allocation towards defense, railways, that is something that even we are expecting in line with the street expectations. These stocks have corrected meaningfully, and they did correct before the market correction started. So I think a good consolidation has happened, and some of the stocks within the railways, I think, should do well with the higher allocation and with the execution picking up pace. The second is the textile space. I think PLI is in the textile, and the opportunity to capture the incremental growth in textiles is definitely for here, and the government has a lot of focus on overall manufacturing, in which textile is a large job creator. So that definitely helps. India being a large cotton producer, that goes in sync with India becoming a large textile producer. So that sector should also do well. Add to it, you have the rupee at all-time low. So exports as a theme, I think, should do well going on from here. So Bangladesh Plus One, or you can say an export recovery, rupee all-time low theme. All these themes should help the textiles sector as well.
That's the latest coming in on some of these sectors that one needs to watch out for. Reliance Industries, that comes out with earnings today. Let me take it across to Varun to get an understanding as to what we should expect from numbers, because you also have Infosys coming out with earnings. So let me quickly walk you through the expectations of that one. The H1, or the first half of the year, was really strong for Infosys, and that's when Q3 there could be a bit of a moderation in terms of the pace. Of course, it's seasonally weak for Infosys Q3, so we're not expecting a big bang number on the top line. It's just a number of around 0.3%. The margins are expected to remain steady, but we'll watch out for the guidance on Infosys, because that is expected to go up. But shifting focus to Reliance now, because Varun is with us to talk to us about the expectations. Varun, take it away on Reliance Industries.
Well, so we are expecting decent set of results from Reliance Industries, wherein the revenues and EBITDA is expected to grow by around 4.6 to 4.7%. The profit is expected to grow by around 10.7% and it will reach around 18,337 crore rupees. The margins, if you see, we are expecting a 30 basis point increase in the overall margins. The margins will increase from 16.9% to around 17.2%. The overall results would be supported by the Jio business, wherein we are expecting the ARPUs to show an increase of around 5 to 6%, and the ARPUs will reach above the 200 mark for the first time. We are expecting the ARPUs to reach from 195 to now 206 rupees. Also, for the other business, if you look at the oil business, the oil to chemical business is expected to show weaker performance. The petchem business is expected to show weaker performance. The refining business, although, will show some better performance. If you see in this quarter, on a quarter-on-quarter basis, the Singapore GRMs were up by around 38%. So that would be reflected in the overall GRMs of Reliance Industries as well. When it comes to the retail business is expected to show muted growth. On a year-on-year basis, if you look, the growth would be around, it would be flat or it would be around 1% only. So if you look at the overall results, the results would be decent. It would be supported by the Jio business, wherein the ARPUs would be crossing the 200 levels for the first time.
Right, okay, that's the expectation from some of the earnings which are lined up today. Siddharth, what's your anticipation? Where is it that we're likely to see disappointment and maybe a positive earnings surprise this quarter?
Yeah, I think that's pretty important to look at in terms of overall results this quarter. So if you see on an aggregate basis, we are expecting another slow quarter of about 4% earnings growth for Nifty 50. And some of the sectors which will do well of that, we have healthcare, which should report almost 20% earnings growth, technology around 10% earnings growth. Capital goods, interestingly, is witnessing increasing in terms of execution, and that should lead to a 26% earnings growth. BFSI, another stable quarter of about 8%. What could be weak? Commodities is something on back of the global impact. We are expecting cement to be a very weak quarter. Earnings could decline as much as 45%. On back of weak realizations, margins getting hurt, and volumes not improving to that extent. Lack of spending both by the government as well as at the margin, slower private capex cycle. That has also impacted cement as a sector. Metals could remain weak at about -9%. Some of the interesting themes that we believe could do well, apart from the broader themes, is, for example, travel, tourism, hotels as a space will do very well. EMS should continue to report strong earnings growth, and capital market, another sector where we are expecting strong earnings.